What's good, YouTube? It's Nash Trading back in the building. In today's video, we're going to be breaking down your trading guide to political and economic turmoil or chaos, whatever you like to call it. We're going to be breaking it down today. I know that there's a lot of traders out there who just genuinely do not have a trading guide when it comes to political and economic turmoil. They don't know how to move about the markets. They don't know how to switch their strategies, scale back a little bit, or even scale a little bit up, depending on your advance and how advanced you are in your trading, right? But in today's video, I'm going to be breaking down 7 bullet points, and I'm going to give you a whole guide of what you need to get through this Trump tariffs and the reciprocal tariffs that's going on, and also including wars that's also happening, right? So I want to give you just 7 bullet points that you can use to add to your arsenal to keep you in the game so you don't get cooked, right? So first things first, the first thing you need to do is know your fundamentals, and we're going to break this down. So know your fundamentals. Stay alert of ongoing news about tariff and trade wars to get a glimpse of how the market will react same day, next week, or whole week. How does the fundamentals affect my instrument? For example, with the ongoing trade wars dealing with tariff taxation, this is causing global supply chain issues that affect commodities and indices. In this case of an index like US 30, if companies within it are having supply chain issues and experiencing higher prices due to heavy taxation, this can interfere with profits. It can cause revenues to decline. Revenue decline equals companies not contributing to the economy in their fullest capacity, right? So with Trump's ongoing tariff wars with reciprocal tariffs and placing tariffs on people and like very much high tariffs, this is causing a lot of companies, especially big companies within like the S&P, US 30, or NAS 100, this is causing companies to look at their spending twice, right? But also within that, they can't really scale up how they want to unless they were prepared for this rainy day, right? So if I can't scale up my business and I am a big business in the US 30 and I can't scale up to contribute more to the economy, this will cause US 30 to fall, right? Because it's losing its value. And with knowing your fundamentals, this helps you to know where a thing like US 30 or even a commodity like gold may go based off of the information and the fundamentals you've been given. And if you don't know what fundamentals is basically news. All right, so what news is surrounding US 30? The news right now that's really surrounding US 30 is the tariffs, right? The reciprocal tariffs that are being placed. So if I were you and I were a US 30 trader, I would look at news that's related to the tariffs. I would also look at other news that's related to US 30. So for example, Federal Powell, or Jay Powell, is speaking tomorrow, right? He's the federal chairman of the Reserve. When the federal chairman of the Reserve speaks, US 30 listens, S&P 500 listens, NAS 100 listens, right? So see what he's going to say and see how what he says affects US 30, right? If you trade US 30 or another index, right? Okay, so 2, we have Read Forex Factory to get a glimpse of potential important data that can move heavy, right? So I'm gonna be honest, I kind of typed this up, so excuse a lot of typos. I'm gonna revamp everything as I'm talking. I just wanted to get this video out because I know that somebody out there can really benefit truly from what I'm saying, right? So read Forex Factory. If you don't know what Forex Factory is, ready to trade Forex, futures, crypto, stocks. Forex Factory is where you can find all your news related to the United States dollar. So for example, on Forex Factory, I think tomorrow, I don't even have it up there. So tomorrow is, again, Federal Powell is speaking tomorrow. That's going to affect the news heavy. And I think that NFP is also tomorrow. So with NFP being in the same day as Federal Powell speaking, the news is going to be very volatile tomorrow. The markets are going to also be very volatile tomorrow. So that's another thing to keep in mind, right? So for example, as I explained in number 1, companies who experience heavy taxation can roll over the burden of cost cost to the consumer. When companies do this, it can cause the consumer to buy less goods and services. This shows up on reports like retail sales reports. Retail sales dives right into the consumer spending as it measures the increase or decrease. If a report comes out that there's a decrease in spending, this can cause commodities like gold to rise because gold is a safe haven asset. So let me explain to you what I wrote for number 2 and why it's important to look at Forex Factory. So for instance, on Forex Factory, you will have a report like retail sales that basically shows consumer spending. It shows if consumer spending is up or it shows if consumer spending is down, right? If consumer spending is down and Trump is having reciprocal tariffs, commodity like gold will probably rise because gold is seen as a safe haven asset for a lot of investors, right? So if investors see that the dollar is being weakened by all of this news that's going on surrounding it, they're going to flock to gold to keep their assets value up, right? So the thing with gold is like a defense. So a lot of investors, most investors, not all of them, some, probably all, some of them, I'm gonna speak for some because I don't know if all do, but well, I'm gonna say some investors, they use gold as a safe haven asset, right? To dodge that punch that may come in. So that's number 2. Read Forex Factory. Stay up to date. Stay up to date on, again, the reports that are coming out about your pair if you trade Forex, or the reports that's coming out about your contract if you trade futures, right? Or your stock if you trade stocks, right? It's just to keep engaged what's going on. Number 3, of course, is know your instrument, right? Whether it's gold, US 30, or oil, it's important for you to know your instrument moves, how your instrument moves through heavy uncertainty and data report releases. Right? Backtest your pairs at times. Backtest your pairs whenever times of heavy uncertainty in the markets or important economic data releases. Knowing your instrument, can put you at an advantage as you get a feel of how your pair moves with certain geopolitical events and economic reports come about. This can keep you confident in your trading and help you navigate certain trading conditions with a clear plan and a balanced mind, right? So I'm gonna recap number 3. Number 3 is basically saying know your pair. Know how your pair moves through certain market conditions. For instance, if, let's say, for example, let's try this. Let's open up our chart right quick and let's really dive into this. We're going to go all the way back to the time where, let's say, when the war started between Russia and Ukraine, because around that time I was probably still a newbie in the markets. In my opinion, I was probably about a year and a half, almost 2 years trading at that time. So we're just gonna go all the way back. I'm trying to make this as fast as possible because, again, I'm not trying to make this a long video. I'm just trying to get you to get the gist of what I'm saying and what I'm trying to convey. So let's say, for instance, right, this was around, I'm gonna say, I think the war in Ukraine started in March. So March of 2022 is when the war in Ukraine started. And as we could see, if it's not helping me out, sorry y'all, but as we can see right here, before the war in Ukraine started, right, price was making its way to go up, which it did. But when it started to kick off, we started to step in and try to help our allies, the market started to push down, right? When war comes around, at the time we had President Biden as president, and basically we were getting involved. We were thinking about, like, again, interfering. So if we're thinking about interfering with war, investors are going to see that as a risky move, right? And they're going to flock out of these markets, especially when, again, something like war is going to tank the dollar, right? most investors invest into that type of stuff, but some of them don't want to deal with that. So they take their money out, they put it in a safe asset like gold. And around this time, gold also rise, right? But price right here made a double top and then it fell, and it continued to fall all the way into October of that same year. So from the time the war started in March to about maybe 7 months later in October, price had fell all the way from about 35,000 all the way to 28,000, right? And that was around wartime. So if you back test that data, for example, like the Russia-Ukraine war, which I just back tested, if you back test that data and see how price, how your instrument reacts when certain news come about, or when it's war heavy news or tariff news, you can get a head start on what may happen when other things start to transpire, right? And that's the whole point of the game, is getting ahead of the curve. And the way to get ahead of the curve is by knowing what your instrument is going to do during certain market times, right? So we already know through COVID, uncertainty, right? So uncertain, unexpected thing happening like COVID tanked the market. We know that the reciprocal tariffs that's going on, I mean, hey, you can look at the news today and say that the Dow dropped, I think, 1,200 points, right? That affects your instrument. And then also, I think I said the war, I said reciprocal tariffs, economic news, certain economic news, right? It all affects your instrument. So you need to know how your instrument moves during certain time periods, like very, very heavy turmoil time periods, again, like war and tariffs, right? 4 is know when to hold and when to fold. Now, another thing, this is very important because a lot of traders don't know when to hold and when to fold, especially in very high volatile markets. And I think that most traders during these type of markets don't know when to hold and when to fold, because they're trying to use that volatility to get them as much money as possible, when in fact it's not going to get you as much money as possible. You're playing a risky game, you're gambling, and it could cost you to lose your account or even your position, right? So know when to hold and when to fold. With the market, investors constantly switching directions with news coming out, this can cause you not to truly know the next market movement. When you are not sure where the market can go, do not rush your trade. If an opportunity isn't there, then reevaluate or close for the day. When the market shows heavy volatility, this can be an unpleasant environment for some traders. It's important to know your tolerance for certain market conditions and respect your limitations to them, right? A lot of traders don't respect their own personal limitations, and the only reason why they don't respect their own personal limitations is because they're trying to compete or race with somebody else, or trying to compete with their future self. And see, the thing is this, right? You're not there yet. And if you're not there yet, you're just not there yet. You have to work your way to that. So you need to know when to hold and when to fold. If you know that you don't do good in very political markets or very economic markets, right? When a lot of economic news in regards to being bad is coming out, don't trade. You know, if you don't do good during the markets, do not trade. It's so easy. Know when to hold and when to fold. The game is not ego. The game is making it to see the next day. And a lot of people don't know their limitations. So my advice to you, especially with number 4, and as it tells you, respect your limitations. If you could respect your limitations and learn to work through it and work in it, you can get faster to where you want to be than disrespecting your limitations and trying to force yourself to be there, right? So that's number 4. We're just gonna keep going. Like I said, I'm not trying to make this a long video. Number 5, have rules specially designed for highly political markets. Ask yourself very key questions that can help you navigate highly political markets. For example, how much am I willing to risk in this environment? Should I size up or should I size down? Should I start trading less? What is my plan for exiting the market when conditions can change drastically? You are in control of your account. Again, I'm going to highlight this because a lot of people don't know this. It didn't even highlight, man. I'm telling you, bro. Look, I had to learn myself. You are in control of your account. Nobody is in control of your account but you. You tell yourself when to get into trades, and you tell yourself how to get out of trades. You're in full control, not the markets, you, right? You decide your risk in uncertain market conditions, right? So for example, I know I'm gonna explain my trade early today that I took during the whole reciprocal tariff announcements that happened today that dropped the market really fast. I'm going to show you the trade that I took that gave me that profited me $1,600 toward my evaluation, and that's due to this plan. I'm going to show you guys after I'm done though. But like I said, have rules specially designed for highly political markets, highly volatile markets. It's very important. It's so you can know how you're going to move, and you move with caution. Again, you're trying to make it to see the next trading day. You're not trying to make a home run every day. Know when to hold and when to fold. That goes back to my other point. Know when to hold and when to fold, right? Have rules. If you don't have rules, you can easily get messed up, right? And number 6 piggybacks off of number 5. Stick to your rules. It's important in this climate to stick to your rules to prevent over trading, over leveraging, and faulty trading. This can help you in a game in the midst of the storm. The goal in trading is not to take any trades in very sentiment heavy climates, but to withstand to make sure you make it to another trading day. Going against your rules can backfire not only on you, but your trading account. You can help your psychology in trading by sticking to your trading plan, right? I'm gonna highlight this. Going against your rules can backfire not only on you, but your trading account, right? Could backfire on your psychology, could backfire on how you see yourself, your confidence in your trading, and it could also backfire on your trading account. So you may go against your rules, get over it, and you're ready to trade again, but now you're ready to trade again and you have no account. Don't go against your rules. Don't be that guy that don't stick to their rules and go against their rules and now they all everywhere, right? And the last point, know your emotional and mental state. Before getting to any trade, ask yourself, are you mentally and emotionally ready to trade that day? Does the news coming out put you on edge? Are you fearful of what may happen if unexpected news pops up? These are questions you can ask yourself before and during the trading day to gauge personally where you're at mentally and emotionally. You can either write it down, do a video recording or an audio recording to keep data for future research. This can help guide you in the future when similar market conditions arise again, right? So it's important to know your mental and emotional state through everything that's going on. Are you getting caught in a whirlwind? Are you checking all of the news and just getting yourself caught in a whirlwind and allowing this news to affect how you see the market in a sense of emotions, right? So going back to my other points, there's no problem with looking at the news. Like I said earlier, there's no problem. I actually, I tell people you need to look at the news to gauge your setups, to gauge how your setups are going to, how you're going to, critique your setups, or even if you want to trade. But the thing is when you allow your emotions to play into the news, right? And that's called sentimental analysis. So do a sentimental analysis on yourself in regards to the news. Are you taking this news emotionally and it's causing you to have a block in your trading instead of thinking it through clearly? You have to ask yourself that. Also, you have to ask yourself mentally, where are you? Are you afraid? Is the news that's coming out having, giving you anxiety? You have to ask yourself these important questions because, again, trading is 90% mental and 10% skill. And if you're able to ask yourself these questions, you can get over the mental hurdles when it comes to these type of markets. It is very important, right? And that's the last point, number 7. And to just close this video out, I'm going to show you guys how I use this guide to make me $1,600 today. And we just gonna hop down on a 10-minute and I'm gonna show y'all what's going on. So rule number one, right? So to go back to my rules, my trading guide rules, I know when to size up and when to size down, right? I have to know when to size up and when to size down, because if I don't know, I'll allow myself to get caught up in a whirlwind. And we're gonna go back to that one. Let me see. Let me see, give me 1 second. I'm trying to find it. Yeah, rule number 5, right? Have rules for specifically designed for political markets. So today I knew that they was coming out with the tariffs, the reciprocal tariffs. I knew that a lot of investors was going to react to this. I already knew that. So the point for me was, okay, now that I know that this news is coming up and we have other economic folders, I think like SISM manufacturing index came out. I think that keeps up with the manufacturing, like how much the manufacturers are buying, I believe. Don't quote me, can't really think about it right now, but that came out right before Trump announced the reciprocal tariffs and the market reacting to the reciprocal tariffs. I knew that a lot of people were waiting and banking on that information, right? So around, I want to say 8:30, between 8:30 and 9:15, that's when Yahoo Finance, because I have Yahoo Finance notifications on my phone as I'm trading to keep up with what's going on. That's when Yahoo Finance had announced that the markets were not reacting well to Trump's reciprocal tariffs, and that basically they're thinking that he's doing kind of like a reset in regards to our whole economic policies and structures, right? And of course, with that, the market tanked. And we noticed that this was going to happen when the market was creating lower highs and lower lows, and also filling in major supply areas. So we take this area right here, that's a supply area. This is a supply area. And this whole thing right here is a supply area, and this is basically where I got in at right here. But I got in based off of market structure, not because of the supply areas. I was looking at market structure. We're making lower lows and lower highs, so I'm going to keep up with that. And on top of that, I knew that Trump came out with reciprocal tariff news, right? He came out with the reciprocal tariffs. And I know I'm saying reciprocal tariffs a lot in this video, but it's highly important because a lot of people are downplaying the news side of it and not correlating to how it's affecting the markets, because investors are going to tell you exactly how they feel. They tell you exactly how they feel through the news. You just got to pay attention, right? But right here we see bearish structure, and then price comes down and completely sweeps this low. Before price even got to sweeping, before price went to sweeping this low, I already noticed that bearish structure, and I got in right here. When price came up and created this long wick, I decided to get in because I knew we were going to sell from there, especially with the market structure. And that's how I use what happened today to help me out. And on top of that, I went on micro. I did not trade the higher S&P 500, the higher contract. I traded the micro contract. So I didn't trade the major one. I traded the micro contract. I traded micro S&P 500. I put 5 contracts on this specific trade, and I let it ride out. And this trade went for 1620, 1620, right? I said 1600. I don't include the 20, but 1620, 1600, what have you, right? It went for that. And that's because I put more size on a smaller contract. Sorry, I was trying to get my words right together in my head, right? And it rolled out. Now, this was my first initial TP, but I let it ride more because we were already gone and we were already halfway there. So I decided to keep my trade rolling, and it got me 1620. I may put a screenshot somewhere. But me knowing that, one, I checked my fundamentals, right? I knew I checked Forex Factory. We had news. I also checked Yahoo Finance, and I've been in the loop about Trump and his reciprocal tariffs, and knowing that he was going to drop them heavy on today, right? And three, I took into account how I want to size up or size down. I decided to size down, but size up on the micro contracts, the micro contracts, right? So that's what I decided to do. That's how I used it to my advantage. And I knew, again, when to hold and when to fold. Normally I trade major contracts, but I knew what was going on. I knew that I had to fold to a micro contract, and I wasn't afraid to do that. Mentally and emotionally, I was good. I was there. I knew, hey, this is the action plan. This is the game plan. Hey, the exit is going to be at a 1 hour demand or a 4 hour demand, what have you, right? And that's exactly what I did. So I hope you guys enjoyed this video. It was a bit boring, not trying to make it boring, but trading, when you learn and trade in education, right? You got to get to the nitty-gritty of it. I'm not here for the robotics, the fanatics, what have you. I'm here to give you the gems and the knowledge of some things you probably knew and didn't know, but if you did know, you probably didn't implement it. And I'm just here to inspire, just here to help you get to being your best self and becoming the best trader that you could be, right? But I hope you guys enjoyed this video, and if this helped you out, congratulations. Take this with you, learn from it, rewatch this video. I hope I didn't make too many errors in my talking. I'm not going to do much of heavy editing. Again, I just typed this up not too long ago, and I just decided to post it because of what happened today. I felt that this was the perfect day to post it, right? But I don't think I'm gonna even put an intro. I might do a little bit of an outro, but again, I hope you guys enjoyed this video, and I hope you had something to take away, and this could help you with your trading. And if you trade tomorrow for NFP, good luck, and just make sure you check your news. Make sure that you check in with yourself before you get into the markets for NFP, and make sure that you know what you're doing, right? But other than that, it's Nash Trading signing out. See y'all later. Peace.